By now, you probably already received your stimulus check deposited into your bank account. It would be titled IRS Trez 310. You would have received $1,200 per person and $500 per child. And you may be wondering, what do I do with this money? Well, on this episode, I'm going to share with you 3 financial steps you should be taking amid COVID-19 and how to spend this money. The coronavirus has spread across the world, significantly changing the way that we live our day-to-day lives. I mean, businesses, multi-million-dollar businesses have closed, and those that are open because they're essential have saw multiple essential items being sold out, leaving empty shelves and frantic consumers. Families and friends who are so used to gathering together and having fun and joyous times have been forced to stay home, work remotely, and only leave the house, and when they do, to practice social distancing. Our economy, which was having its greatest years of economic growth, saw unemployment rise to 6.8 million unemployment filings, or 11% of the workforce filing unemployment in a 3-week span. Churches closed, live events closed, handshakes closed, dating closed. And with this infection increasing by the hour, with our health insurance or health industry rather trying to figure out what to do and how to come up with a vaccine that can help alleviate this biggest problem, I have a question for you. What should you be doing financially to help you make sure that you never be unsecure during a time like this ever again? So I'm going to share with you these 3 steps. All right, step number 1, you must create or revisit your monthly budget. That's right, I want you to create or revisit your monthly budget. According to Career Builder, 78% of Americans live paycheck to paycheck. So that means that during this crisis, if you're someone who was laid off or you're someone who had a reduction of hours, you saw a significant impact in how you live your daily life because you were expecting to get that typical paycheck that you receive every 2 weeks. And so because of this, a lot of people, and maybe you're someone who was affected, had a shift in your lifestyle because the income that you received on your bi-weekly paycheck was maybe a little bit lower, or you knew that this next paycheck, because you were laid off or had a reduction of hours or furlough, of course, then you would be highly impacted. And so what I want you to do in order to help you become financially stable so this would never happen to you again is I need you to revisit your monthly budget. So what do I want you to do when you review the monthly budget? The first thing I want you to do is take a look at your discretionary spending. So discretionary spending is the amount of money or the money that you use that you don't necessarily have to, but it's something that you kind of do. So discretionary spending would be entertainment. It would be things like buying clothes. Now, I'm not telling you to cancel your Netflix membership, right? But what I am trying to tell you is that you need to review that and see how much money you're spending. Because I'm assuming if you've already created a monthly budget, you know exactly what you spend on things like fixed costs, like your mortgage, car insurance, life insurance. And you've looked at your variable costs, things that are based on usage, like car gas, right? So I want you to write down, if you haven't already, everything that you spend on a monthly basis, and I need you to review your discretionary spending. Now, the best way that you can do this, and what I do and what I recommend that you do, is use an application to help you monitor this. So I recommend you use Mint.com. So that's the application that I use to help me manage how much I spend on a monthly basis to make sure I'm adhering to my budget. And so the importance of you doing step number 1 by creating or revisiting your monthly budget is that you need to get really tight on how you're spending your money. So If you haven't done it already, you can pause this video and start doing that right now. If not, keep this in your back pocket as a step you need to do after you've watched this video. Step number 2, you need to create an emergency fund. According to Gallup, 40% of Americans would not be able to cover a $400 emergency with cash or savings. So that means that 40% of Americans, if some emergency came up and it cost $400 or more, would be able to use cash or savings to handle it. And so during this time, during this COVID-19 process, a lot of people, when they were furloughed or laid off, didn't have enough emergency funds to be able to cover their monthly expenses, be able to cover a situation where maybe they had to pick up their child early, or maybe they had to go to work but their child was out of school, and because of that, then they had a lot of financial hardship. And so what I need you to do and recommend is that you have an emergency fund, preferably 3 to 6 months of cash reserve in an account in case of emergency. So how could you do this? Well, I recommend that for at least a year or two that you work up to at least have 1 or 2 months of emergency funds saved by saving a little bit of money that you were able to save using that from that discretionary spending in step 1 to build up your emergency fund. In fact, you can even use your stimulus check to kind of get that started. And you don't have to necessarily use all of it, but maybe take a little bit of that money and start your emergency fund. At least 3 to 6 months. And if you can do 12, that would be great. Step number 3, invest into the stock market. According to Gallup, 55% of Americans reported that they own stock as of April 2019. So what that means to me is that 45% of Americans currently are not invested into the stock market, and they need to do so right now. And so we can have a conversation as to how do you do that, whether you should invest in index funds, ETFs, or individual stock, whether you should have a proper asset allocation in gold and stocks and bonds and other type of instruments. We can have that conversation. But if you are not currently investing into the stock market, you need to do so right now. Let me tell you why. I don't know if you know who Warren Buffett is, but obviously he's one of the top 3 richest people in the world. And when he invests in the stock market and he thinks about investing into the stock market, or a general principle that he talks about is being fearful when others are greedy and be greedy when others are fearful. And so right now during this COVID-19, a lot of us, or many people, are afraid, right? We're not knowing or don't have an idea of how this thing is going to end, what the economy is going to look like when it's all said and done, after this has passed us. But while we're thinking, and many of us are thinking about this, there are people who are seeing this as a huge opportunity. And so normally companies that would make a lot of money and would be doing well or not doing well right now. And so you have an opportunity to invest in these stable companies during this time. And so you can invest a lot of money right now, or just a little bit if you don't have that much, in these particular companies. So when things go well, then you're making a lot of money on the back end. You're basically buying low and selling high. And so you have to get invested into the stock market. I actually did this myself. I have a retirement account that I have with Fidelity, but I said, you know what, let me go ahead and during this particular time and start to invest into the economy. So what I did was I went ahead and opened up an account with Robinhood, which is a brokerage, right? So I downloaded the app and I said, you know what, let me go ahead and invest. And so I allocated $5,000 to invest. And so what you can see right now, I'm opening up the app and you can see that you see $5,000 there, and you can see what the gains have been, the percentages, and you can see even some of the companies that I invested in. And so if you were to decide to do this, go ahead and use Robinhood. There's other brokerage. You got Vanguard, Fidelity, Ameritrade. There's so many other ones that you can get started in. But the most important thing that you need to know is that you need to get started now. And I know the last question, or maybe a question that you're asking in your mind, is how much should I invest? Well, Fidelity recommends that you invest a minimum of 15% for your retirement. But if you can't do that, get started right now. Even if it's $100, $200, $300, go ahead and just open and download Robinhood. Open it and set you up an account and start investing now. And I know you may think, well, I don't know what I'm doing. I promise you this, and this is what happened to me when I began investing seriously, is that once you get started, you begin to want to figure it out because now you got money on the line and you want it to work out. And so we can talk about whether or not you want to be a passive investor or more of an active investor. And most people say that being more of a passive investor is best because you're not looking at the ups and downs of the economy because you're focusing on being more of a long-term investor. But whatever you do, step number 3, invest into the stock market. There you have it, the 3 financial steps that you need to take in the midst of this pandemic. Now the bigger question is are you going to take any action? Don't leave this video without trying to do at least some of it, or maybe leave this video so you can start doing some of it, right? But whatever you do, go ahead and take any of those steps, get started, make some traction so that you can be financially positioned anytime that this happens again, or just in general. With that being said, I want you to do something that your future self will be amazed by.